Everyone's doing good. So this is the follow-up to lesson 10. It's not exactly a lesson, but we can count lesson 10 as having two halves because we done our initial analysis, we built a thesis, we saw things play out now, and this is a follow-up video to show what has happened, how we traded it today, and some things have gone against what I wanted, and we're going to go through why. So cool. Let's start out on the 4-hour chart, right? For starters, if you guys recall, in lesson 10, right, from here to here is our 4-hour range that we were playing in. Price was somewhere here, and I said I want the Asia range to have that consolidation. I want to see us contract, or rather protract, and go into this 4-hour fair value gap. We mentioned a 15-minute mitigation block somewhere here, and I wanted to potentially tap into that. And then I wanted to see expansion to the downside, right? So cool. Let's come down to what our day actually done. Okay, so this is today's price action, right? Let's start off by coming down one more time frame, and I'd just like to start by drawing on New York midnight price. Cool. And let's come to our 15-minute, so it's a little bit clearer. So we know that this is today's price action, right? Asia did start as we expected by forming a range, which is brilliant, and London did exactly what we expected. We traded into that 4-hour fair value gap. If I delete the fibs just to clean up a little bit, these two lines represent the 4-hour fair value gap, right? As you guys can see, I know it's very, very slight, but you see how this candle traded into the 4-hour fair value gap. This is still valid. This is a sweep in. And what else is this? This is a form of IOFED, institutional order flow entry draw, because we swept this liquidity, swept that high, traded into this, and we had a lower time frame market structure shift. Yeah, cool. Once this had happened, we wanted to attack the sell side. We have equal lows here, perfect equal lows here. This low did sweep them, but to me, I know retail would consider this as a support. So this was the next obvious target, right? So now, price did what we wanted for the day generally, because the initial plan was consolidate, do this into here, which is what we received, wait for the confirmation of a market structure shift, which happened, trade lower and target Asia sell side liquidity. Overall, I told you guys my target is this low. This target was not met, and there's been a small shift in bias, rather short-term bias at least, not long-term. So we can get into that in a second. Let's talk about how the day traded today. Cool. So now we came into the day with a plan, and this plan had a lot of logic and reasoning behind it. So this is why it worked out so well. As you guys can see, we started with this bullish move. New York midnight price sat here. Once you saw this displacement away, you could have put a fib from this low to that high, waited for price to come to the discount, and wait for price to trade into these fair value gaps, potentially into this order block or this breaker block over here. But of course, price did not trade into this fair value gap, reacted and moved away. So this was the first opportunity to catch a trade, right? This was the first obvious trade that I would have traded if I was up. I was not up for early London, as most of you know. Struggle to wake up. Okay, cool. So let's just say, right? So this is our discount. We're buying. I would have set my buy at the start of this fair value gap. Why? Because I'm considering the first array in my discount. Cool. I know this indicator is a little bit messy, but I'm just going to keep this on for reference, just so you guys can know what's happening where. As you can see, this is in Asia, but this is also inside the London kill zone, right? What would I have targeted? What would my target have been? A sensible target, probably this high. Target this high, you can get, a 1-to-1 hour trade. It would have been fairly simple. As you guys can see, you get tapped in, just give it a little bit of time, strong move up, nice. But price is bullish here, right? You've had a market structure shift, and we know, building that whole case yesterday, all those little bits that we brought in, it's fairly logical price will reach this fair value gap. So me personally, even though I know this is hindsight, my target would have been this fair value gap. I would have targeted here, and this would have offered me a 3.5 hour trade. Quite nice, right? So not too bad. What you also could have done, if you're awake during the middle of London kill zone, right? I want you guys to pay attention. We have to read price from the left. We know Asia ranged. We know New York midnight price forms. We have a run below, and then we have this market structure shift. Not only do we have this market structure shift, but it comes to the OTE level, comes into our discount, taps into an array, and moves off. So what do you know? That you're bullish, right? Price is telling you that it's bullish. So imagine you missed that first, this trade that I just showed you, that first retracement. What can you do? Just wait for the next swing. From this low to this high. How would I have traded this? Let's talk about it again. We can put, as you guys can see, this is an order block, this candle. I would have placed my stop loss here, and again my take profit up here. That's a solid 2.5%. Especially this specific trade, you can see the displacement. That would have been a very nice quick trade. So that was two good opportunities, in my opinion, to catch longs today. So me personally, in some of these scenarios, I won't recommend this until you have, I'd say a reasonable amount of experience. You know what you're doing, but you could have stacked these entries. And I'm not telling you guys to go and stack your entries on every single swing. Please don't do that. You have to be very certain of what you're doing and understand exactly what price is doing to stack entries. You need to be good at managing risk and managing your trades. But in this instance, that is something I probably would have done. Again, I was not awake, so this is hindsight. I did stack entries today, and I'll get into which ones I did, because I traded this expansion downwards. If, right, we're considering a trade from here, stop loss goes here, we target the fair value gap, and then we also catch this second swing. This is give or take, let's say 3.5%. This is 2.5%. Right? You could have made 6% this morning. You can be done for the week, done for the day. You're finished, right? It would have been quite nice. And of course, I know it's not as simple. You might have taken partials, blah, blah, blah. But let's just say between 4 to 6% you could have caught. Now, the thing is, right, that's literally just the London kill zone. Price starts to trade lower here. Now, when price started to trade lower here, I was looking at this low here. This low is the one that I wanted to go. But I came to my lower time frame, right? I understood that price swept into this fair value gap. I wanted us to go deeper. I'll be very honest. I said this on the chat as well. It's there. But we didn't. Right? And then I saw, on the 3 minute, we've swept this. We've had displacement. Where's displacement? This strong move away, right? Let's just call it a rejection. A very strong move away. And we take out this low. We also take out this low, right? These are valid lows on the 3 minute, of course. When we took out this low or this low, what did we do? We create a market structure shift, And now I'm looking for a retracement. But I was wary. I was wary of these highs. there's liquidity sitting here, right? You guys can agree. There's equal highs. We have these highs. I didn't really want to, take the swing point. The swing point would have been, realistically, I would have used this candle down to here, or I believe there's a large wick in here that I was trying to use. If I just turn this off for a second. Okay, yeah. So that's a little bit clearer. So the way I would have tried to do it once this market structure shifts occurred is probably short from here. Now, look, this would have worked, right? But I didn't take this. I wasn't interested in this specific trade. Why wasn't I interested in this? Because I understood that there is a fair value gap in price here. Yeah? And price could just run these equal highs, these highs straight into this, and then trade lower. And I would have been prepared for that. I would have market entered the trade, but I wasn't interested in taking this swing here, this range, and waiting for price to come to a premium. But if you did trade this, you would have gotten in a nice move. You probably would have seen a lot of drawdown. One extra gem that I'll give you guys, right? Not exactly a gem, but something we can logically use. There's nothing obvious on the 3-minute here, right? There's no fair value gap. I understand this is an order block, but we could argue that it's been tapped. So what do? We come down to a lower time frame. Not to zoom in. Okay. And then attempt to find points of interest. Find our POIs on the lower time frame. On this time frame, there is an order block that's untapped. This large candle, I would have liked this. And I would have entered the trade somewhere around here. But again, I didn't enter this trade. So what I'm trying to say with the OT here, right? Let's say we have an OT on the 15-minute, and your 15-minute looks something like, just wait for it to load. Look something like this, your range. There's nothing obvious. There's no obvious point of interest. You can drop a time frame, then look for, point of interest. Something that makes sense. But cool. Let's turn our session indicator on. So now I want you guys to understand, right? I know a lot of people pointed this out. The whole time I am aware of this trend line forming. And I didn't like the look of this. Again, this was also explained in chat. I didn't really like how this trend line is looking. But being logical, I was fairly confident the high of the day is placed, right? Or at least the high of London has been placed. We've swept into a high time frame array. We've had displacement away. And we've had, we're showing clear bearish order flow is what we call it. You guys can see we're trending downwards. And of course, this trend line was very clean, and it made me a bit wary. Are we going to have a run on it, or when are we going to have a run on it? But to me, this target seemed inevitable. Equal lows next to equal lows. Retail are thinking this is a beautiful support. There's no way we're running this. You can even see this cluster of equal lows. I knew, price is going to come and run this. Why? We're only being logical, right? And you won't see this every day, but it will be a very common occurrence where price will run both sides of Asia. And that is what I wanted. We'd essentially ran, of course, you can argue that this is the Asia high. But to me, running above the range, I will count it as running the Asia high. And now I wanted to target the Asia low. So cool. So now let's navigate back to where we were, right? Just to make things a little cleaner, I'm going to turn off the indicator and explain to you guys the trades that I took today. So now I'm confident price is bearish. Why? We're having these swings. Price is coming to a deep premium before we short. So the next trade that I took, right, I saw this range form. So what did I do? Place my OTE as is. Right. And over here, I shorted using this order block. Right, I'm just gonna place it here. So this actual trade that I took is in the chat in live time when I took it. My stop loss, even though I do tell you guys above the one, I placed above this high, right? Just to give my stop loss a bit of space to breathe. And what was my target? I was targeting that Asia low down here, right? So cool. So I got in over here when this wick tapped me in, right? So cool. Now, right, let's get rid of this range. The range was from this swing to this swing. Cool, let's get rid of this. So what did price do now? Let me just move this across. Or rather, let me make this smaller, sorry. Just so it's a little bit cleaner. So now you guys understand that I've been tapped in here, right? And I'm fairly confident I'm bearish. Price did not take out this previous high. I respected this previous high. We like to see this when we're bearish, right? This is the first lesson again, the basics of market structure. Price then comes and creates another swing. So what did I do? Price goes ahead and creates this swing. And again, on the 3 minute, I couldn't see a clear point of interest that I liked. So I came to my 1 minute time frame. And I saw this large order block, but I also saw this fair value gap. And I understood that this candle here is a mitigation block. So I set a sell from around here, right? The 50 of the mitigation block. And I know we'd be tapping into this order block and we'd be filling some of this imbalance, right? So sell set around here. And as usual, stop loss above the high. And my target didn't change. My target was what? It was Asia low. Quite simple, really. Combining these two trades, I'm not saying this is how much percent I caught today because I take partials. You know, it's good to be smart. It's good to take your money out of the market. But let's just say I held them to full TP. This was already around 6%. And what I'm trying to show you guys, right? I'm not trying to flaunt, oh, look at me, I made this much percent, blah, blah, blah. I explained to you guys yesterday, right? I haven't traded this week. I didn't trade Monday and Tuesday. Monday was a bank holiday. Tuesday, I didn't see anything I like. Yesterday, specifically, I told you I'm hunting for a setup. I'm very confident on my bias. I like what price is doing. It's lining up very well. Now, it makes a lot of sense for me. If price does this, then I'll be looking for this. That's what I'll explain to you guys. Now let's actually add what happened. If price runs into this 4 hour fair value gap, I will be looking for shorts. It's in the premium of the 4 hour range. I understood that. I want to be looking for shorts now. I want to wait for that 5 minute market structure shift to act as a green light, act as a confirmation, and then I'll be looking to short. Yeah? And that is exactly what happened. That's what played out. So now, right, let's imagine that was around 6.5%. If I took all of that, I didn't. If I took all of that 6.5%, I can be done for the week. Finish, right? Even 6% in a month can be great. If you're funded with the right size, right, let's put it into context. If you have a 300k funded and you made 6%, that's 3k times 6, which is 18k. MFF get their cut. Off the top of my head, we're just gonna ballpark it. They take something like, I don't know, 4k. You're left with 14k in a day, right? That is an insane amount of money. Some people will look at 6% and be like, oh, that's air. But that's the power of percentage, right? Even 2%. 2% in a day is a very good amount of money to make. 2% in a week is great, but people don't accept that. You have to play the long game. I do have episodes planned where we'll talk about psychology, profitability, and risk management specifically, right? But even from now, I know a lot of you are educated on, funded accounts. You just need to understand that, there's looking at things as percentage, and then there's realizing, in real life, what does this percentage mean? I understand if you're like, 5k funded, 2% doesn't mean much to you. That's $100 on a 5k funded. But the reality of it is, if you can do it on a 5k funded, you can do it on a 10k. If you can do it on a 10k, you can do it on 20, on a 50, on a 100, on a 200, on a 300. You get max funded to 600k, right? It's just about patience. Do you have the patience to make 2% every week and then sit on your hands and tell yourself, you know what, I'm done for the week. I'm going to protect the money I've made. I'm done, right? Because think about it. Let's just say MFF, their first phase target is 8%. If you make 2% a week, you have a 30-day limit on your challenge, right? A month is 30 days, give or take. You'd pass that challenge within your 30 days if you made 2% a week, because you would have made 8%. The second phase is 5%. Of course you're going to pass, because right now you're currently making roughly 8% a month, right? That's all you need to do. Now imagine you're making that 2% a week consistently. You're making 8% a month. 8% a month on the correct account is insane. When I say correct account, I'm just trying to explain, with larger sums of money. I know on smaller accounts, 8% doesn't seem like a lot, but it is. Again, using a 300k, for example, which is offered by MFF, 3k times 8, that's 24k. Let's say they're taking their cut, 6k. You make 18k in a month. Some people make that in a year, right? So when we're doing these percentages, when we're taking these trades intraday, right? I can show you guys the trades I took, and you'll see that almost everything is closed under 2 hours. Because I'm happy, 2 hours is a lot, 2% is a lot. But of course, the market offered a lot today. The market did exactly what I wanted, so I took advantage of it. One final setup that I managed to catch, right? Let me just check something, sorry. So these were the Asia lows. We're going to mark these out quickly. So I want you guys to understand, this is a very, very quick scalp that I did. Okay, cool. This arrow represents the Asia low. So I showed you guys, I took a trade up here. In fact, I took 2 trades up here. The first trade was from here. The second trade is this range, and I traded from this wick. So now my target was this. This wick came down, right? And you guys can see this wick didn't hit my arrow. It didn't take it out yet, right? So what's happened now? Price has tapped that retail support once again. So now retail are probably, they're going to be gassed in it. They're going to be thinking, that this support is so strong, it's going to hold forever. The second that happened, I know that support is about to get blown out of the water. That support is not going to be breathing in the next few minutes. So what happened? I understand that price is in this range. I understand, it's giving me an opportunity to short. So what did I do? I understand there's an order block up here on the 1 minute. In fact, actually, sorry, I think, let me just go back to there. Yeah, this is better. I was on the 3 minute. I don't really like using the 1 minute. I think there's a lot of noise and it's too zoomed in for my liking. Typically, you will never see me drop under the 5 minute, but again, today it was a bit wicky on the 5 minutes, so that's why I came lower time frames. But anyways, I saw there's an imbalance here. So what did I do? I took the start of this imbalance, set my stop loss at the high as usual, and all I did was place my target here. Price tapped me in, and this was a very, very rapid 1.4%, 1.4R. I'm happy with that. I'm probably out for the week. I know there's news coming up tomorrow. Why do I need to risk my money? Right? I want you guys to get into the same mentality. I'm not saying this to, show off. I don't want to come across as that sort of arrogant or whatever, right? That is not the aim of what I'm trying to tell you guys. What I'm trying to tell you guys is be happier with small amounts, because in the future, those small amounts can make you a living, like an insane living, right? Sure, you can say to me, oh, why sort of a small amount you can make more? Show me that you can make more for months and cool. But, as my own mentor said, and even me now, I realize I don't see a lot of high RR traders. And for me, psychology wise, I'd rather win a lot. High RR traders usually tend to, suffer more losses, and then of course they make it back in a few trades because they're using high RR. I like this 2RR, 3RR business, in and out of the market quick. You see me, I don't like being on charts too long. I don't like staring at my screen, because when you're in trades, regardless of what you say, most of the time you're going to have some sort of emotional attachment to it. Even if you're good at not acting upon it, you will have an emotional attachment to it. You're going to be under some sort of stress when you're in a trade. Even me today, of course I was taking these shorts and I was targeting Asia low, but I tell you guys, I practice what I preach. We consider all possibilities. I saw this trend line building, and to an extent that scared me, because when I'm seeing these equal highs, when I'm seeing this perfect trend line, I knew it's only a matter of time before it gets wiped. I knew there's news later in the day. So, eventually I was fairly confident that this is going to get taken. So cool. Now let's discuss what price actually done. Asia consolidate, London offered a Judas, and New York gave us this reversal, this strong reversal and continuation. Now, from here to here, let's measure something. From Asia low to London high is only 52 pips. Only. Why am I saying only, right? The ADR for today was around 124 pips. 124 pip ADR. So we were either going to get a very, strong move down here, but that move didn't seem so plausible to me. We couldn't have such a perfect trend line. We couldn't have news at 3 p.m. and 5 p.m. and not sweep this trend line. So this move to sweep the trend line, to me, was quite obvious. We came up. Remember this imbalance I mentioned before? We filled this and we rejected. So let's just say, you set this. I did not set this trade. I know people in the mentorship or in the chat set this trade. So that's the reason I'm using it. You would have set your stop loss here at the high. And I'm sure most people, probably didn't set the take profit here. Right, that's literally where price came to. I would have potentially set at this low over here. As you can see, price just, happened to reverse straight after very strong displacement upwards. So now, right, price has made it very clear we're reaching for something. And it's not below us, it's above us. Price is bullish. So now let's hop out of time frame. Let's get rid of this, fill this imbalance. After we filled this imbalance, we traded into this order block. Inside this order block, I was anticipating a reversal. I was sitting on my hands. I didn't get to this order block and say, oh, let's short. That's not how it works. We wait for that market structure shift. It didn't come. Price was bullish. Price is literally telling you what it wants to do. I've said this so many times. This is why we wait for confirmations, because that's the confirmation. They're signs from price or the algorithm, let's say. So now, right, on the 4 hour, we have this trend line building. If we come out another time frame, above this, we have this fair value gap. We have these two order blocks. If we come out one more time frame, above these highs, we have this weekly imbalance. This weekly imbalance looks very interesting. On top of that, what did we do? We ran the previous weekly low, ran below it, and we had a reversal. One more interesting thing. We've also ran the previous monthly low and had a reversal. Right? This is why it's important to look at all your time frames. need to consider what what price is doing everywhere, what it is drawing to. So at the moment, I like the looks of this. I think it's plausible that price could potentially run into this, this fair value gap. Draw this on my chart. Cool. And inside this fair value gap, of course, we have the daily fair value gaps as well. And as you guys can see, we have this high. Look how nicely this high is engineered into that, right? If we run this, fill some of this fair value gap and move lower, it's a form of IOFED, because regardless, price is still bearish, right? Very clearly bearish. So I would like to see a run into this, sweep this high, and move lower at the moment. I'm not going to say that's an immediate target. My actual immediate target is to, start by sweeping this trend line. Oh, that's the wrong thing. Okay, cool. But as you guys can see, if we sweep this whole trend line starting from here, it's very likely we'll run into here. And what can we pair this with now? We start by coming to a weekly. There doesn't seem to be something very clear that lines up with this. It's not, very, very close to price as of yet. However, on the 4 hour, you guys can see, similar to EU, we've engineered a trend line. And similar to EU, we've also started to sweep it. If you guys recall in my weekly outlook, I said I wanted to start with a run lower. There's a 1 hour imbalance in here. There's a 1 hour fair value gap in here, right? An IPA that I wanted to run into. It's looking likelier than ever that we run into here. Rather than this being my target, my actual target will be to run this low. We had this accumulation and we didn't run the sell side. On top of that, we can consider this a market maker sell model. Market maker sell models will finish beneath the initial accumulation. So I want to see a run below this. I also understand there's news drivers, so it's important to be, careful. Our bias could be wrong, but we've had a very strong market structure shift. By strong, what I mean is you can see this displacement, this strong move away. We took out this low. And of course, I want to see DXY offer some sort of retracement before we head lower. Then I want to target, these lows. Then target this low, and of course, finally, my target will be these lows. Once price reaches here, what do we have below this? We have a potential weekly fair value gap that we could reach into. I'm not as certain about this, but we'd have to assess once price comes lower. Now we have to look at what kind, if price is heading down here with strong displacement, it's probably likely that we're going to head into this, right? But, if price it's had this displacement here, but if it just simply trends down, we come here, we take out this low, and then we have strong displacement once we react to this 1 hour order block, this fair value gap, displacement upwards, then that'll show me price is then going ahead and probably, heading for new highs, left equal highs here on the 1 hour. So cool. As you guys can see, that's how we compare this with EU. Now with EU, just because we've had, the run into this weekly fair value gap, of course we will look for reversals and we'll anticipate them. But we also want to keep an eye on what DXY is doing. As you guys saw, we built a logical bias and we had targets in mind for today. So just bringing it back to basics, right? Looking at today, we knew we want Asia to range. We want London to do this into a 4 hour fair value gap here. And then we wanted to target Asia SSL. So in my last video, I literally drew this out. I said I wanted continuation downwards to take this low. But there's a reason I never set any take profits at this low. Right? There's a reason. One being greed. We don't want to maximize profit every time. We want to be in and out quick. And two, this was a very obvious target. This was a secure target. I was confident in us taking these equal lows. And that's what happened today. And I'm very happy that I've done that instead of, placing a target here for whatever reason. I'm sure, someone out there might have. And I hope it's a lesson learned. If you guys have any questions about this video, about yesterday's video, just hit me up and we go through it. This is a real-time breakdown because I gave you exactly what I was thinking yesterday. And I've come back and I've showed you exactly how I analyze, how I go over things where I'm wrong, and how I start considering new probabilities now, new possibilities, the new arrays that price could head into, my new targets. This is, this isn't me even simplifying or dumbing it down. It is literally me just breaking down my exact thought process for you guys. So I hope these videos are very useful. You guys can start to see, one, exactly how I'm trading day to day, and two, as I introduce even more concepts, things start moving smoother for you. But I'll see you in the next lesson.